They have to continue to print money because the global financial markets are in a debt spiral. I own Bitcoin as a hedge against the fiat Ponzi. I'm not telling your listeners you have to own 100% Bitcoin. I think that's irresponsible. But the wrong answer is to own zero. I have a price target on Bitcoin of over 2 million US dollars per Bitcoin in today's dollars, Dinny. In today's dollars. I'm not talking about dollars that in 20 years. Everything, these are all functions of the US dollar as global reserve currency. Well, we can get into the reasons as to why that's going to change over time. And this is why I love Bitcoin so much. But long-winded answer, it's all a function of the strength, relative strength of the US dollar and interest rate policy by the central bankers, the global central bankers. It's absolutely insane. And if you separate all the fluff and all the noise, it's very simple, people. They have to continue to print money because the global financial markets are in a debt spiral. D-E-B-T, debt spiral. We could run through the mathematics, but one of the most telling charts, Dinny, was something that Lynn Alden sent out a couple of days ago. The headline was, the U.S. Treasury actually published this. And it's a chart that shows the projections of the U.S. federal deficit as a percent of as a percent of gross domestic product. And it's just an asinine chart. Like, there's no way it can exist, but it's the projections of the U.S. Federal Reserve. And all it means is fiat currencies will continue to crater, which means you need to own hard assets, of which Bitcoin is the hardest and most decentralized asset of them all. If they taught you how the financial system actually worked, you would never put your money in a bank because it's so risky. Well, then the system doesn't work because it's all based around banking. And they need you to hold your money in a bank as a deposit that doesn't earn an appropriate return on capital so that they can fund the rest of the Ponzi using your capital. Don't you see? That's the way. That's why they can't teach you this. Because if they did, you wouldn't be a depositor with, as you say, all this money. You'd actually be an investor with assets in real estate and gold and Bitcoin and hard assets that maintain their value. They don't lose their value by holding your money in a bank account. They have to continue to print money or else the system collapses. Fiat debasement is a certainty, which means you need to own hard assets, of which a home is a hard asset. Bitcoin is a harder asset than a home, but you can't live in Bitcoin, right? You can't live in a Bitcoin. You have to live in a home. So it's going to continue only because, now there could be, it's not a straight line of the fiat, and the house prices don't go straight up, but over time they go up in a sawtooth manner because the fiat currency goes down in a sawtooth manner. That's the problem with soft money like fiat currency, okay? That is the fiat death spiral. And the only people that benefit are the people that own all the assets. They're called the cantillionaires at the top, and everybody else gets penalized. First of all, I am a Bitcoin maxi from a digital asset perspective, meaning I think Bitcoin is the only digital asset that actually offers any true value in the digital asset ecosystem. I say that because it's the only truly decentralized protocol. And Ethereum, firstly, doesn't know its supply, claims it is disinflationary, meaning they're burning tokens, but that can be changed at any time at the whim of a proof of stake fiat type of system. I don't want to recreate the fiat system in Ethereum, okay? You may love smart contracts and all that. I don't own Bitcoin because of a smart contract. I own Bitcoin as a hedge against the fiat Ponzi. Now, everybody, therefore, needs to own some Bitcoin. I'm not telling your listeners you have to own 100% Bitcoin. I think that's irresponsible. But the wrong answer is to own 0% of your portfolio in Bitcoin. So owning 0% Bitcoin is actually more risky than having a proper portfolio allocation. Is somewhere around 5% of your total net worth. Okay, you have to add in your house there. You got to add in your stocks. You got to subtract out debt. Okay, but at the end of the day, your total net worth, 5% of it should be allocated to Bitcoin. Why is that? Well, because I think Bitcoin is the greatest asymmetric investment opportunity I've ever seen in managing risk for over 30 years. I have a price target on Bitcoin of over $2 million per Bitcoin in today's dollars, Dinny. In today's dollars. I'm not talking about dollars that in 20 years are going to be worth zero because your house is going to be worth 25 times what it's worth today. I'm talking Bitcoin in today's dollars, a $2 million price target. We could run through the math on that, but I will also say, I'm not the only one saying this. Fidelity, one of the 5 largest asset managers in the world, has a price target of $1 million by the year 2030 and $1 billion by the year 2040 in Bitcoin.
Crazy.
Now, just think of how astronomically mind-blowing this is. So if your portfolio is 5% and that 5% goes up 20-fold, all of a sudden that 5% is turned into something pretty huge. Now, you're probably supposed to risk manage it and pair some of your profits. But that's the beautiful thing about the asymmetry. It's insurance. And if it goes to zero, which it's not going to, but let's play a binary outcome. It's either worth 2 million or it's worth zero. Well, you've lost 5% of your portfolio, but it was valuable insurance against this fiat Ponzi. Using a price of $20,000 on Bitcoin, US dollars, versus my price target of 2 million in today's dollars means that the market is only saying that I have a 1% chance of being right. Okay, 20,000 divided by 2 million is 1 in 100. 1 in 100 equals 1%. I'm not telling your listeners that I'm 100% certain that Bitcoin's going to $2 million US per Bitcoin in today's dollars, but I will tell you I have a far higher comfort level or probability than 1%. Another way of saying that is I'd say I'm at least 50% confident that it's going to my price target, which is to say Bitcoin should be trading at $1 million today. According to Foss, Bitcoin is a winner. I got involved in Bitcoin when it was under $1,000 a Bitcoin. And your listeners are going to say, oh, Foss, now you're trying to pump the bags because it's 20 times that high. And I'm saying, no, guys, Bitcoin's actually a better investment today on a risk-adjusted basis than it was when I got involved in 2016 at under $1,000. And the simple reason is because of the government, the global government response to COVID and all the BS. I'm sorry to, I like to swear, I'm a trader. All the bullshit that the central banks and the money printing fools and clowns have forced upon the world. The reality is we are in a debt spiral that we can never recover from. And it's only a matter of time before the US dollar and all other global currencies continue to debase in value. And most importantly, some of them are going to fail. When people figure this out, they're going to want a lot more than 5% of their net worth in Bitcoin. Okay? So that's how you get to a lot higher numbers over time, as global asset managers understand the beauty of this trade. So start small, be disciplined, get yourself to 5%. Don't try and trade it. Try and be disciplined and understand that this is your insurance policy. I like to say Bitcoin is an IQ test in risk management, and most of the world is failing it because they listen to idiots like Warren Buffett and Charlie Munger, who have no incentive to tell you how the fiat Ponzi works because they have all their money invested in the fiat Ponzi, in the banks of the world, etc. It will stop trading as a risk asset when people actually understand it's insurance. And insurance is a risk-off asset, meaning as the world gets more risky, you want your insurance, okay? But right now, the world has it programmed as correlated to the NASDAQ, or more importantly, correlated to the DXY. Okay. We talked about this at the outset, but Bitcoin over time will come to be appreciated as insurance. And therefore, it is actually the opposite of a risk on asset. It is your portfolio insurance. And when risk increases, meaning it's measured by the VXY, the volatility index, Bitcoin should be going up in price as the world is scrambling for protection. I don't know when that's going to happen. I'm highly confident it will happen, but I can give a prediction and not a price, or a price and not a time, but never give both, right? Never say it's going to happen by this date. There's layer one, Bitcoin, which is your digital gold or your digital energy. And then there's layer two and layer three applications that are very exciting. Don't tell me that the Lightning Network is not one of the most exciting applications you've ever seen, okay? So I'll talk about that technology and the payment rails for the Lightning system and it disintermediating things like credit cards and remittances. All this other stuff, yeah, it could be exciting, but it's centralized and it's a fraud, okay? Half of the shit that's being built on shitcoins are frauds, okay? FTX was facilitating the development of frauds, and it itself was a fraud. Celsius was a fraud. For Christ's sake, people, give your head a shake. Lots of the incentive to build a shitcoin is to enrich the inventor of the shitcoin and rug pull everyone else who invests in it. Are you guys that fucking stupid? Bitcoin's the opposite. Bitcoin is the insurance against the fraud. I've spent 35 years on Wall Street. Trust me, there's a lot of nefarious activity that goes on there. Well, the shitcoin world makes Wall Street look like a pristine capital.